Kern here. Welcome back. This is Growth Mentality. And here with Orlando, wanted to welcome you back. Thank you for tuning in. And the day is April 14th. Coinbase opened today. The market was pretty volatile today, but the sun was shining. The weather is warm, and it's good to have the sun on your face. Anything you want to say?
Yeah, this is Orlando Iglesias here, and it's great to have another episode just to talk a little bit about the markets. Like you said, it was a little bit volatile. A couple of stocks kind of were in green today, but some that I would have anticipated that should have been doing pretty good didn't. Like for instance, I got a little bit of money in Riot, so I would have thought Riot would have skyrocketed today, just because Bitcoin was doing so well. So normally they aligned really well, and so when Bitcoin goes up, it does. And seeing that Bitcoin was at an all-time high today, I thought that Riot. I was excited, and I was like, Riot is going up, and it actually didn't. It went down a little today, so I was a little bit surprised about that, Kern. But the volatility in the markets, right? It still hasn't really stabilized. Still a lot of questions out there. I know Coinbase is a big topic today. I believe that's why Bitcoin kind of shot up to an all-time high. Even Ethereum, if you look at that, it's up over $3,000 finally, right? Where it was kind of just hovering around that $2,600 mark, and now Coinbase goes public, and they shoot up, right? So it's good for crypto country, right? It's really good that Coinbase really did this. This is Coinbase. If you guys don't know, is a platform that you can buy about, I say, and correct me if I'm wrong, Kern, about 90 different currencies on there, right? Cryptocurrencies on there. So it's like your like Kern likes to say, it's the bank of cryptocurrency.
Yeah, I do. So I was little bullish on Bitcoin, and then I got more bullish when the companies started buying in, and then I got bullish on Ethereum, just because the quicker transaction. I was doing my due diligence, digging into it, so I started liking that a little bit more. And then with this opening, Coinbase, I like the, let's just say, diversification that comes with it, that you're basically purchasing the casino, and not the individual games, being the currencies and which one's going to win. I think they're all going to have, I think it's going to narrow down. There's going to be a couple big ones. I think Bitcoin will be there. I think Ethereum will be there. I think there's going to be a couple other ones, and they're going to have their each benefits. But I like betting on the house instead of betting on the individual currencies a little bit more. So, but I have a feeling this is going to be a push and pull, a bull and bearish kind of thought process with Coinbase, because people don't know how to value it. And I know it shot up. It opened today at $250, and then it shot up. I was watching it around 400, I think, and then I went up to 420, and then it started trickling down. The Fed was also talking, and so I know they were talking about his dovish tone had a factor on the market, but I think there was a lot of hoopla, and a lot of people were behind this, and they didn't know which way it's going to go. I think it's going to settle out. People are going to try and find the valuation, but the last quarter alone, they generated, in terms of revenue, $1.8 billion. In terms of profit, I believe it's around 800 million in just straight profit, with 50 million consumers participating in Coinbase. So I think it's going to be a very, very interesting. And I think Coinbase is going to be a platform that maybe, because of all the profits, maybe they spread into into the banking avenues, credit cards and debit cards and that type of stuff. Because then you can say, okay, well, you can convert your cryptocurrency into cash, and then here's a bank card. You can just use it from there, right? And that's when I think, and sorry, that opens up lending, right? Because you're using it just like a credit card at that point. So they could potentially charge you interest, or they could say it's like a savings account and you still earn interest on the cash you have in there to use on your debit card.
Oh,
So
absolutely.
they have a lot of, if they, especially if they keep growing, like people don't know how big this can actually get because the total addressable market, right? The TAM is a big opportunity for them. So if they can keep this trajectory, and I think that's why these next 90 days are going to be key. What happened? Like that was the last quarter. What's happening this quarter? And then what are they doing to expand? And the more they do those things, I think the higher the PE ratio goes and the higher the multiples go for this stock. I was listening to something earlier today, and somebody was saying they could see it being valued at $2,500 a share, just because they said if it was valued similar to Square, in that multiple that they were getting on their PE. And I think that was over 200 on that PE. And right now, I believe it's at 11. And so typically in growth industries like Tesla and other things, they have higher multiples. And so that's going to be interesting these next 90 days, and whether it's a hit or miss, right? Because it's going to look like we're right here. And then these next 90 days, the people that are bulls are going to be up here, and the people that are bears are going to be down here, right? So there's going to be more price disparity. I'm very interested to see how this goes. But even not to compare it, but you know how controversial Tesla is as a stock. I think people, this stock is going to be one that I think might be more controversial than Tesla, just because the valuation is going to be huge.
Yeah, well, I mean, I think the thing with Tesla too, right, and it's probably going to be the same for Coinbase, is that people don't know where to put it in, right? Like you look at Tesla, people argue it's just a car company, and then other people say no, it's not. It's not just a car company; it's an AI company or it's a tech company, right? And so different. So like people have different ways of thinking of how to evaluate it just based on what they think that Tesla is. But you and I have dug pretty deep into Tesla, and we understand that with Tesla, they're so far ahead of the competition. It's not even funny, right? Like companies are just trying to figure out how to put their car on the road, their first car, and Tesla's already talking about batteries that can last like a week or something like that, right? Like they're just so far in advance when they're doing that. So it's going to be, to your point, where Coinbase is just going to be very interesting how people kind of view it, how they stack it up, where they put it, and then how what the evaluation is that they're going to put on it. So what are your thoughts about, as opposed to them doing an IPO, they actually just came out and did direct offering?
I like that a lot better than an IPO. With IPOs, it slows the process down. And I'm not saying I am against Wall Street or the way things are, but I think some things just need to be done for the sake of, let the free market decide it, right? And it feels like things that are slowed down, monotonous, go the way because everybody else did it. Just like, remember SPACs were coming out like crazy last year, right? And there were so many. And I was watching an interview with Kevin O'Leary, and he said he said he runs away from SPACs that any celebrity endorses, because a SPAC is, or because you got to do your research, right? In whatever industry you're doing, and to actually support a SPAC, like you need to be in there grinding and basically be part of the company. And so he goes, any celebrity that obviously is in something else, and then they just put their name behind a SPAC, he goes, I run away from all of those.
Well,
So,
not only that, to dive a little bit deeper, it's not like they put their name on it. That company's just saying, "Hey, we'll give you free shares." So at some point, those celebrities are going to run away with those shares and just dump them and get paid, right? And then who's the one holding the bag? Is us, the consumer, who's saying, "Oh, this celebrity is in this, so let me go ahead and put $1,000 in it, or 20,000." But this celebrity was only holding it for the 6 months that they had to, or the year that they had to. And then once that time period is up, they take their money and they run. And guess what? They didn't pay for it. So no matter what it's worth at that point, they've made money, right? They're in the black. But us, the consumer, depending on how hard that fall is, right? Like you can be in the red, you can lose it all. So I'm with Larry all the way in that, and I'm running away from that. I'm not even forget
Mhm.
about running. It's not even coming up on my radar.
Yeah, well, one thing I've done, and obviously paying attention to the market, there's a lot of good companies out there, a lot of good companies out there. And instead of just throwing your money to all these companies, you should actually think what your higher conviction is.
Mhm.
And even if it is a couple of stocks and you have that conviction for it, only if you're going to invest. Investing isn't for everybody, right? In terms of stocks, right? A well diversified S&P ETF is good enough for some people, right? They don't want the risk. Mutual funds may be for others that want a little bit more concentrated. But if
Just
you are ever looking for a stock, don't ask other people for stocks. Don't go on a whim, ask a friend. No, you need to think about your companies that you want to invest in and invest in them, and be comfortable with that if you're willing to take the risk. But
yes.
don't I think of it as being a cop out. If someone's like, oh well, what should I invest in now? What do you mean? What do you like? Right? That's why I think back to mutual funds and ETFs. Like, if you're not going to stick with, let's just say Texas Instruments, right? And for your, if you do not believe in them or their mission, you're not going to stick through the ups and the downs with it. So don't ask for individual stock picks. Stick with industries that you like. Stick with or diversification unless you specifically like a company. That's why it's better to just do your due diligence on that one company and then invest in, rather than just listening to other people.
No, absolutely. I think just to kind of tack on, I think not necessarily listening to other people, but it's always good to have a conversation on why they're so adamant about that stock or something like that. But to your point, I don't think you just say, "Oh, go ahead," because I think at that point it's kind of like you're putting you're putting your hand in the hole and you're feeling around, and somebody's giving you some advice. And yeah, that one advice that they give you, maybe you grab something that's great and that stock does good. But if you're putting your hand in the hole and you don't know what's on the other side, it's only a matter of time before you hit that little the rat trap and it
You get
snaps and
bit.
breaks your finger, right?
Mhm.
So to your point, you have to be you have to do your due diligence on the companies that you like, or even that it aligns a little bit kind of like with your own mission, right? And you like what they're doing, right? Like you take Coinbase for instance, they go direct offering, and then not only that, they have about 1,700 workers there, and they gifted them each of them 100 shares, right? Just to say thank you for being with us, thank you for sticking it out for these years and helping us get to this point. So that's like a company that you're like that you can feel good, like they made it, but they also gave back to their workers that they know they wouldn't have been where they're at now if it wasn't for them. Whereas you have some other companies that are like, so what? Like
Mhm.
I've made billions and I don't care. I'll replace you in a heartbeat. So like little things like that. And you have to know like the management. I always go back to sports. We're both big sports guys, right? Um, there's no surprise that the New England Patriots are a good team. The reason why they've been good for so long and considered a dynasty is because from the owner to the GM, from the owner to the president to the GM to the head coach, they were all in sync and they were great. So it was a good organization from top to bottom. Right? What do they say? Shit flows downhill, right?
Yeah,
And
yeah.
so when you're good from top to bottom, what you do is you make sure you draft the right people, right? And you do your due diligence with who you want. So if you look at them when they drafted for those great teams, they weren't hitting. It's not like they were hitting on first round draft picks, and that's what made them great. What made them great, it was those second, third, fourth, and fifth round draft picks that made the Patriots great. I mean, Tom Brady was a sixth round draft pick, right? And
Yeah.
so that's what you have to look at when you're looking at a company that you want to invest. Not necessarily like, oh, they make this product and it's great. Okay, but how is the CEO? What's his philosophy or hers? What do they do? What do they like to do? Okay, how about the CEO? Okay, like what's the flow of the company? If the CEO leaves, is it him who makes it great or her? Is it them who make it great and they leave? Now, is this company going to fall apart?
Yeah.
Right. But now if you have a great structure in that, then you know no matter what, if the CEO leaves, then they'll continue to do great things because the way they structured the company is why they've had so much success. So those are like little things that you truly have to know, because how many times have we seen we're invested in mutual funds, and as a portfolio manager, and that mutual fund had done really well for 4 or 5 years. The portfolio manager leaves, goes somewhere else, or what have you, and then the new portfolio manager comes in, and it's terrible,
Hmm.
right? Because that portfolio manager was the one who was holding everything together, and so when that person left, that fund just fell apart. And sometimes it's vice versa. They leave and it kind of gets better and it stays the same just because they had a great team, right? So that's what I caution people with. Just make sure that you do your due diligence. You take a deep dive into what they're doing, if you like it, and if you can explain it. And if you can explain what the company does and what you like about a company to somebody who knows nothing about investment or nothing about that company, then you feel comfortable with it. And as long as you feel comfortable with it, you'll be okay withstanding those storms, right?
Hmm. That's good. No, I think that's a good point to summarize this one up on. But to do your due diligence always, if not, or you don't, it's not in your expertise, I would refer you to an expert, and make sure they're doing their due diligence to um, provide you with options that best fit your risk tolerance. Thank you for coming in, listening to myself and Orlando talk a little bit about investments, Coinbase, Bitcoin, and the current markets. Thank you.
Thank you.